So you may have been wondering, Chris, what happened to the 0 to 100k Vanguard portfolio? I know it's been 4 months since my last update, but I've been ridiculously busy creating content and I have some really exciting things I've been working on which I'm excited to share with you soon. I've also been cautious that I don't want to keep bombarding you with episodes. We're already up to 8 episodes, I'd like to finish this with a maximum of 10. My plan once I reach 100k is to transition this into a monthly portfolio update, so I can keep you guys more updated and more in the loop. I have been doing this over on my Patreon, but I think it would be cool to do it here too. For those of you new here, I don't expect you to go back and watch 7 episodes, don't worry. When I started this YouTube channel, I thought it would be a super cool idea if I was able to invest 100% of the income the channel generated into an investment portfolio. So this is what I've been doing so far. I reveal exactly what I've earned every month from different revenue sources, so I can be completely transparent with you on what I'm earning, and the reality of how much a channel like this can make. Over the previous episodes, we've gone from 3,000 into 21,000, up to 36,000 in episode 3, and then we got up to 43,000. Followed by 54,000. Episode 6 we got to 57,000, and in the last episode we managed to get to £68,390. Now my income is broken down primarily into 4 categories. We've got AdSense, affiliate, sponsors and Patreon. So let's see how we got on in the last 3 months. First, we have ads. These are the ads that play on my channel and they tend to be one of the more consistent earners for me. Being in the finance niche, they do pay me more per view. For example, if I was in say the gaming niche, I would need roughly 10 times the views to make the same money. My RPM, which is YouTube's measure of how much I earn per 1,000 views, has been £13.45 per 1,000 views. Although the problem with that is it sounds great, but a lot more people are interested in say Minecraft or Fortnite than they are learning how to invest. So it sounds great, but the reality isn't quite what it seems. On average, I'd say I earn around £50 per video from ads, most of which take around 10 hours work. So that's why it's important for me that I have other revenue streams to help boost that up. I am working on some additional revenue sources at the moment, which will hopefully make me more self-sufficient and less reliant on sponsors, which I'll keep you updated on. So for the last 3 months, I earned £868 in September, £639 in October, and £795 in November, giving me a total of £2,302. The dream would be to be able to sustain myself off that income. It sure makes you realise what some of the big channels are making, but I'm not sure while staying within the UK finance niche I'll ever be able to reach that point. But I would rather do that than compromise what I'm here trying to do, which is help as many people as possible start investing. Next is affiliates, which is a small cut I get if someone signs up for a platform that I recommend. This has always been one of my best earners, and thankfully investing platforms are able to pay you a reasonable commission if someone signs up. It's not ridiculously high, but it still helps. Without this, I would be lost. I'm really lucky that I'm able to recommend platforms that I actually use, so that really pairs quite well. Now this has become increasingly more difficult as a process, with compliance teams needing to review any content I post, but it's still good. This has picked up quite significantly since the summer. September was 2,883, October 1,478, and November was 1,776, giving us a total of £6,137. Moving on to sponsors, this has dipped because I'm getting increasingly more picky with who I'll work with, as it's so important to me that I only recommend people that I would use myself. This was £250 in September and October, and November was £1,050, a total of £1,550, which is still pretty reasonable. And last but not least, my favourite, Patreon. Patreon absolutely cripples me in fees, it's so high, but I love having a community of people working towards the same goal and we can chat on a daily basis. Here I also share these updates more frequently. It doesn't generate me a ton of money because I've always just charged £5 or £10 for it. And I appreciate right now that a lot of people don't have extra cash to support via a Patreon, so a huge thank you to those who do. In total, September was £181, October £164, and November 148, giving a total of 493. I have a pretty nifty tool in the works which I think will be great for this, and I'm working on ways that we can develop that community to become this strong network of investors all working towards financial independence, so I'll keep you posted on that. So combining all the income for the 4 revenue sources, it gives us 10,482. Now of course we have to do the really boring thing here and save 30% for tax and national insurance. I'll get that pension relief on the other side though, so we'll get the 20% added back back as a bonus to the portfolio, which is why a SIPP is so powerful. That leaves us with £7,337 to invest. And here you can see I've got a pension contribution tax relief payment coming into my account of £1,834. Believe it or not, these actually take 6 to 10 weeks to actually get into your account. I mean, it is HMRC after all, what else can we expect? So here is how the portfolio is looking. We're at £84,390, which is a nice jump from last time. We've got £64,871 in the Vanguard Developed World Fund, VEVE, which is now up £6,958. I'm leaning towards now just sticking to this fund to hit 100k in this portfolio, as it would keep it nice and simple. You may notice down here that I do own VEVE, which is the income version of the fund which pays me out the dividend rather than automatically reinvesting them. If you go for this fund, I'd recommend picking up the accumulation version instead, which is VHVG. The reason I've got this one is because Vanguard has only recently added VHVG to its platform, and I started this series before that, so if I was to make the switch, I would now lose all of my historical data, which is very annoying. Considering Vanguard owns the Vanguard fund, you would think they would have it on their investing platform in the first place. You'll also see I've got around 10,000 still in cash. I'm now slowly trying to get rid of this, and the way I'm doing it is investing £5,000 each month at the moment just to average it into the market. Data shows that lump sum investing is better in the long run, but honestly I feel better doing it this way and it has always given me better results. In the meantime though, I'm not leaving it as cash on Vanguard. They actually decided to cap their interest a while back around 2%. Before that it was pretty decent. Instead, I'm keeping it in this, the Sterling Short-Term Money Market Fund. Yep, this is the one with the crazy chart. You can ignore this though, and it's actually better to look at this, which is the annual return. You can see here it's been very good this year with higher bank rates, giving me over a 4% return on my cash. So you can see I've made a couple of buys here, £5,000 each, roughly a month apart. And I'll keep doing that until my cash balance runs out, which should be within the next few months. And of course, we can see just how good the market has been doing since the end of October, which I'm hoping you guys felt too. The S&P 500 has reached a new series of all-time highs so far in 2024, after closing in January its first record high in about 2 years. The index has been rising against a growing US economy, easing inflation and investor optimism around artificial intelligence. The Magnificent Seven, as they're called, has been absolutely smashing the rest of the stock market this year, gaining 67% compared to the rest of the market doing just 8%. I mean, just look at the returns of companies like Nvidia with their AI chips, Meta, who are huge in the AI space, and Amazon, who have also had an incredible year. This is both great but terrifying at the same time. If there's some kind of correction, it could hurt. But in the meantime, I'm happy to benefit from it. 2 years of the market doing next to nothing, this just illustrates how important it is to stay the course and keep investing on a consistent basis. Someone said to me last week how they invested and it just never did anything, not knowing that they had to consistently invest. If the market dips or rises, my plans won't change. I'll keep buying consistently each month. The most important thing is just making sure you're invested. And just remember, when you zoom out on a chart, these will just be small blips on a much bigger timeline. And you'll think to yourself, remember when I wasn't sure about investing then? So let's look more specifically at the performance of the portfolio. We can see I've contributed £73,116, and the investments have returned to me £9,315, which has ended up at £82,432. This number is slightly lower than our total because I'm still waiting for that government payment I showed you earlier. My rate of return according to Vanguard is 19.26%. This figure is something Vanguard comes up with using their calculations. My real return has actually been 12.74%, which, given the market conditions over the past 2 years, I'm pretty happy with. You can see down here how the portfolio has grown. I think this is one of my favourite parts of the portfolio. What this actually shows is just how good adding on a regular basis is, because the difference between this and when I've lump summed into an ISA has been massive. In this account, I've not really noticed it being down at any point, maybe a tad, but then I'm just adding more money each month, so it keeps going straight back up. So it feels like the portfolio has been consistently gaining, which is what I would recommend you do too. We can see this broken down in more detail. We've got investment gain, £6,900, investment sold profit, £393. This was where I decided to sell the emerging market funds for now to keep it simple. My interest has been £939. This is so high because I did have quite a bit in cash at one point, and we've had £1,150 in dividends, which has been great. I'd prefer this to be automatically reinvested, but it's not made too much difference as really I'm investing every month. I paid £0 in in tax as it's all within my pension, and my charges for the account have been £129. And speaking of charges, if you are looking to do something similar, I would highly recommend going for Invest Engine instead. I started this portfolio before Invest Engine came onto my radar. I haven't wanted to move within the series as I don't want to lose that historical data. I am going to move over once I hit 100k, so I've got my pension and my SIP in one place. This will also save me on fees, as I'm currently paying 0.15%, capped at £375 the year, whereas Invest Engines is capped at £200. At 100k my fees will only be £150, but I want to get there sooner rather than later as I want to keep as much historical data as possible. For my ISA it was a no-brainer as they don't charge a management fee. I am actually happy that they're charging for the SIP because a company needs to make money, they provide a good service and they're being competitive with Vanguard. For me the main benefit will be having it all in one place and also the ability to use their rebalancing tools. I also hate that I can't see a breakdown of my individual stocks and holdings on here like I can on Invest Engine, which is my favourite feature. I'll also get access to a range of other ETFs on there, whereas on here I am limited, so we may mix things up. Now if we look at the breakdown by month, we can see just how good the last few months have been, which has really helped the portfolio. Coming off the back of August, September and October not being very good, it's been a welcome change. November and December were 2,600, January 1,140, and February has been 1,400. These have made a huge impact and helped the portfolio smash through the 70k bracket and up into the 80ks. Hopefully the next update will be in the 90s and then we'll be at our target. I'm not quite sure when that will be, but I'm trying not to stress about it too much and just keep going. I have felt the pressure this year with the limits as I've always wanted to try and hit them. I was actually lucky enough to do this in the last tax year. This tax year it's been massively increased up to a limit of 60k you can contribute, but that won't last and I'm expecting it to come back down in the next tax year. So this tax year I've contributed £18,709 and the limit is £60,000. So there's no way I'll be getting close to that by the end of this tax year. The last one was £40,000, which was still a massive challenge to do, but it was way more sustainable. Also in the last tax year I was a bit of an idiot and didn't save the 30% for tax, which did help it. And this is why I haven't contributed as much this year. In January I paid around £25,000 in tax, which hurt to say the least, and it's definitely wiped out some of my savings. This is combined with my business, but mostly due to my heavy pension contributions. I'm trying to get out of the mindset of needing to hit the limits. Between this and the ISA, it can be so detrimental to your mental health. Trying to fill both is ridiculous for anyone to try and do. I'm still debating if I'm going to fill my ISA this year as I'm hoping to buy a property in the next 6 months, so we'll see. The portfolio is very diverse at the moment, and I've got 87% invested in equities, which will eventually be 100%. You can see it's 60% in North America, 4% in the UK, as well as some other small amounts in other countries, and 6% in Japan. Company-wise, my largest holding is in Apple, followed by Microsoft and Google. This will be the same across most index funds. And my sector allocation is also quite diverse, my largest being in tech, followed by consumer and industrials. I'm pretty happy with this at the moment. I am toying with the idea of ditching emerging markets altogether, but I've decided not to yet. I do really like the idea of one fund to 1 million, but I also like the idea of testing different funds and experimenting. Let me know what you think. I'll throw a couple of polls up too close to the time on the community page. I also want to mention I do have a newsletter I send out from time to time, which is completely free too. I'll link that too in the description because I'm trying to build a list so if anything ever happens to YouTube, I can still keep in touch with you guys. So jump on there if you haven't already. The plan is to keep building these accounts until I reach 1 million combined. So if you haven't already, subscribe and turn on notifications as I'll keep going with these videos until we get there. I'm also aware that I don't want these to feel unrelatable or make anyone feel bad in any way. I show these not for my own benefit. In fact, it would probably be better for me to keep it all private and not show it. I mean, everybody you know knowing what you've got in the bank is a little bit weird. The reason I do it is because I feel like if I was just starting out and someone showed me their portfolio in this way, it would really inspire me to start and get going, which is just what I'm trying to do here. If you want to know more about which funds to buy, I would suggest checking out this video I made, which goes through all of the best Vanguard index funds. Or if you want to learn how to start investing with just £100, this video could also help, and I'll see you guys over there. Thanks.